I'm Kyle Malnati, your host of the Calibrate Real Estate Podcast. At Calibrate, we exist to help people create generational wealth through real estate. My personal mission is to encourage, empower, and educate you by sharing best practices from business leaders that are proven winners. Broadcasting from the Mile High City, thank you for tuning in to episode 124 of the Calibrate Real Estate Podcast. I'm your host, Kyle Malnati. Our esteemed guest, our 3 times in 2020 guest, Patrick Langhans of Guild Mortgage. Patrick, thank you for joining us again.
Thanks, Kyle.
It's exciting to talk to you. This is exciting times in the real estate industry. If you're a recent listener, you know Patrick was featured in episode 117 and 118, double pack, if you will, back-to-back episodes. Episode 117 is going to be similar in some ways to this. We're just doing the update of that. Patrick, COVID-19, coronavirus, quarantines, stay-at-home orders, safer-at-home orders. I mean, we got all this new stuff happening in 2020. I'm starting to hear commercials that are saying, are you excited for 2021 or are you ready for the year to end already? And it's only May. Our last discussion about the COVID-19 lending world and what that environment is like was over a month ago. It was at the end of March, and you had shared with our audience that you were doing these updates through BombBomb to your database about what's happening on a daily basis as people are just naturally asking these questions. And if you hadn't applied for a loan yet, you were thinking of buying something, or if you're a realtor assisting someone in the purchase, things were changing on a daily basis. And then you started doing it twice a day, because it was changing literally from the morning to the afternoon. So what's the climate of the lending environment like today as we're recording this here on Wednesday? And we'll launch this on Friday, May 15th. What's the lending environment like? What are some things that you're just tackling as a mortgage loan originator? And what are some things that people need to be aware of right now? And then we'll go into some topics like forbearance, some miscommunication in the marketplace, purchase versus refi, all that type of stuff. But what's just happening right now that you're talking about in your BombBomb videos?
Yeah, so I've actually been able to cut that back to about once a week. So I can cover the week's changes in one video. I don't have content every day of changes, which is good. It means there's some sort of stability out there. I think it also depends on what lender you work with. Certain lenders are subject to a little bit more volatility than others, so they'll have a lot. Some lenders may have changes on a daily basis, but at least in my company, it's been relatively stable as far as changes, and once a week's been pretty sufficient. But some of the hot topics are, of course, mortgage forbearance and how that all works into qualifying people, whether it's a good idea or not. That's been a huge topic. In general, mortgage lenders are they're going through a change similar to 2008, where the rules are changing frequently. But luckily, the past few weeks, it's been a little bit more calm, which is a good thing. So,
and on the topic of forbearance, it's a question that comes up, and it's an unfortunate question for a lot of people because they're really considering what does it look like, as I may not be able to make a mortgage payment. You may have been able to make it through 1 month with a stimulus package, or you've still got your job. But as things start to change, and I know like in sales, as salespeople aren't able to be on the road, and I've got a lot of people in my own neighborhood that their base pay is not what they make their money off of. It's their bonuses, it's their commissions, it's all these other things. So as this prolongs into the summer, and people may consider forbearance, I think there's a lot of mixed messages out there about how you might be able to skip a payment or do something different. What's your advice for someone that's looking at, the biggest key here is they're not going to go bankrupt. They're really just looking at trying to make it through this year. What would be your advice as it relates to their existing mortgage and making payments, do forbearance? How does that all look for you as a lender?
Yeah, so my advice is if you're considering it, you have to call whoever's servicing your mortgage. So, that's my advice. Here's what I know as far as facts, and then what decision you want to make is completely up to you. But definitely call whoever you're paying your bills to. So the problem with mortgage forbearance is it was released quickly through the CARES Act that Congress passed, and they basically said, hey, you don't have to make your payments, and yeah, that's it. You don't have to make your payments. Mortgage lenders are required to let you go into a forbearance. And there wasn't a lot of detail around that. Congress just said, this is the rule. And lenders weren't really prepared to answer the questions of, okay, well, it's forbearance, not forgiveness. So one of the questions is, well, how do you pay it back? So you're not skipping payments, you're delaying the payment. So it's not forgiveness, you do have to pay it back. So I think one of the hard parts was it was released, and then the lenders didn't really know how everything was going to work. No one knew how it was going to work. And so then you get the media involved and lots of different opinions. And so people were going into forbearance without even understanding what the terms of the forbearance were. So here's what I do know about forbearance. Again, it's not forgiveness. So you will have to pay the money back. So if you skip 3 payments, you will make those 3 payments again. The question is how. So the forbearance letters I've seen of approved forbearance are giving the client 3 to 4 options. And the scary part is they're not saying, the letter doesn't say, hey, your forbearance has been granted, and here's how you're going to pay it back. Most of the letters I've seen from lenders say, hey, your forbearance is approved. You don't have to make these payments. Call us when you're ready, and we'll discuss how you can pay this money back. And then they list a few options. So one of the options I've seen is you can pay it all in one lump sum when you start making payments again. Well, that kind of sounds weird. Like if I had the money to pay it all in one lump sum, why would I go into forbearance? So I don't think very many people will do that. The other option would be taking kind of like an escrow shortage when your taxes go up or your homeowner's insurance goes up. You take whatever that balance was, spread it out over a certain amount of time, and you actually increase your monthly payments for a certain amount of time to pay that money back. So if you skip 3 payments, maybe they spread those 3 skip payments over 12 to 24 months. We really don't know how it will work, but basically one of the options I've seen is they'd spread it out over time. The third option I've seen is what they didn't word it like this. I honestly forgot the terminology they used, but it was basically a loan modification. Now, loan modification, and that's all it basically said is, or we'll modify your loan, which to me is very open-ended, and we don't know what that really means. Typically, a loan modification would be they'd recalculate your payment over the remaining term with the forbearance added onto the balance, maybe the same interest rate. I mean, we really don't know. So that's why the loan modification is a little scary too. So those are the 3 options I've seen on the forbearance piece. The big concern with forbearance is, will it affect your ability to borrow money in the future? So I've already seen some credit reports from clients where they thought they were in forbearance with some other company, and their credit report actually was hit with a late payment. Now, per the CARES Act, they're not supposed to get a late payment, but what I saw was a late payment. So I've seen a couple credit reports like that. Even if they went into forbearance and the credit report did not say they were late, we're still going to be able, as lenders, to look at the credit report and see that they skipped some payments. So we'll be able to know that they went into forbearance. Whether that impacts their credit score or not, doesn't matter. We can see that they went into forbearance. And kind of the piece to that, back to the point of, not being prepared for how we look at loans when this guidance was released, Fannie Mae and Freddie Mac, the big regulators of mortgage rules, still have not told us how long after a forbearance does a client have to wait before they can qualify again. So to sum that up, if you went into forbearance, it may not hit your credit score. We may not see an actual late payment on your credit report, but we will be able to tell that you missed some payments, you were in forbearance, and will that affect an underwriting decision where you have to wait a certain amount of time before you can refinance or buy a home again? So the point of all that is basically, if you don't need the forbearance, there's a lot less risk by just making your payment. So I think the media did a poor job of explaining what forbearance was and was like, hey, you get to skip payments, miss payments, they'll just tack it on the end, no big deal. And so people were like, oh, well, you know, I can use some just in case money. Makes sense, right? So they applied for the forbearance, not knowing that this could impact your ability to qualify for a home in the future. You definitely can't refinance if you're currently in forbearance. So if rates drop to 2% tomorrow and you're currently in forbearance, you cannot refinance or buy a home. So I know that's a long answer. I got one more point on forbearance. If you're thinking of selling a home in the next year and a half, I would advise you to look into whether forbearance makes sense, because let's say you go into forbearance and then 6 months later you want to sell your home. Well, what if Fannie Mae comes out and says, no, you have to wait 12 months before you get another mortgage? So basically, if you're going to sell your home and you need a mortgage to buy your new home, if you go into forbearance now, you could sell your home and not be able to get a mortgage to buy your new home because you went into forbearance. So if you're thinking of selling in the next year and a half, be careful about the forbearance thing because it may limit your ability to borrow money on your new home.
Great answer. I think of a couple of responses to that. My grandfather, who's still alive to this day, almost approaching 100 years old, he was an attorney for the US government. He was a patent attorney. And one of the things he used to famously say is that every law removes some freedom and has unintended consequences. You know, any legislation is going to do that, especially if it's a knee-jerk reaction to something that's going on right now. So be aware of that. The next thing I think of is I got my degree in finance, and one of the things you have to do when you get a degree in finance is you take economics classes, and one of the first things you learn is that there is no such thing as a free lunch. And so the idea that this is just, hey, it's a vacation from payments, it's going to have some consequences. And then I think the other thing we were talking as we briefly prepped for this, we were just talking about there's a business decision and then there's an ethical decision with not making your payments. As someone that believes that I have a high moral standard, you promise to pay this, regardless of what you think about banks, regardless of what you think about mortgages or your current situation. You promise to pay this, and it's your responsibility and your obligation. Now, of course, things change and people have very unfortunate situations, but I think you really have to weigh that business decision versus, you know, the moral or ethical decision, because they're related. But I think sometimes people's business minds say, oh, I can skip a payment or I can kind of move this money around. But I think you've really got to lead with your heart and say, like, is this the right thing to do? And of course, if it has consequences, that makes a lot more sense that you would be really beware. Some misinterpretations. I think there's a lot of mixed messages out there. You mentioned, you know, the media, which obviously their job is to report what's going on. Your boots on the ground. You're in this every single day. You're working for a lot of clients that have a house under contract. You're working more on the purchase side than you are on the refinance side. So what is it really like? And what is Guild Mortgage and the Patrick Langhans team sharing with each of their clients as they go under contract to buy a home on just some really important things to do to make sure that they're the best equipped to get a loan to purchase that dream home of theirs in this environment? Because I think it's changing, but then there's some things that are just fundamental that you just need to be reminded of as either a realtor that's working with a buyer or as the buyer yourself.
Yeah. So my advice to buyers is, number one, got to work with a good lender. You got to really vet your lender, because what's happening to lenders, a lot of lenders, luckily we haven't been impacted that much, but a lot of lenders are changing the rules at the last second. So you may be pre-approved now. You may have a 680 credit score, which is a decent credit score. And then, you know, a day before closing, the lender changes their guideline and says, no, now we're only doing 700 credit scores. And now you don't have a loan, and you got to scramble. So you really want to vet your lenders and make sure they're solid. Good questions to ask is, hey, what guidelines have you changed recently with everything going on? So for instance, if you ask me that question, I would say, well, mainly we just increased our minimum credit score requirement from 580 to 600. Okay. That's pretty much it. And there's some other minor things, but most people don't use those types of financing. But in general, that's been the one big change with us. But you could call a lender and say, hey, what guideline changes have you had? And they could say, well, we only accept 700 credit scores, 20% down, and you have to have 6 months emergency fund in the bank just to qualify. If you hear like really stringent changes or lots of changes, that's a sign that lender is either in trouble and you may be able to expect more changes, or they just don't have the appetite to do mortgages anymore. So some of the big banks who do mortgages, savings accounts, checking accounts, they don't need mortgages to stay in business. So a lot of them have just pulled back. They're like, okay, we're not gonna offer mortgages, and if we do, you're gonna have to be uber qualified to get this house.
They're pricing themselves out of the market.
They're pricing themselves out of the market, where if we increased our credit score to 700, we're going to do half the loans, and we're not going to have our revenue anymore. So as a buyer, you really just want to vet the lenders. I think local is more important than anything right now. You don't want to click button, get mortgage right now, not in this time. You want consultants, advice, options, guidance. So I think local is important. The other thing I would say is be really honest with your lender. If something's changing or something's gonna change with your income, employment, assets, credit, let them know as soon as possible, because one, they can help you with a solution, and two, they can help protect you and your earnest money that you've given up front to buy that home, and make sure you don't lose it. So be really honest and upfront with your lender. I look at myself as an advocate for the client. So there's nothing you can tell me where it's going to, cause me to say, oh, I don't want to do your loan. It's how can we help you fix this to get your loan done?
If anything, the borrower and, the person who's buying the house is giving you the tools to actually solve the problem if they have something coming up. It equips you, it gives you the ability to actually help them out, as opposed to trying to bury it and think you won't find it. The next thing that I think is really important, and you touched on it here, is just that it seems to me like tax returns, not that they're not gone away, that's important, but current income and the ability to actually produce, this is what I'm actually earning right now, is sounding like it's even more important than past income was in this environment.
Yeah, they are doing checks right before closing to make sure you're still employed. So within 24 hours of closing, they're going to re-verify that you're still employed. So that's one part. And then tax returns with self-employed people, they, depending on what industry they're in, they may or may not ask for a couple extra verifications. So, they extended the tax deadline. So if you run a travel agency, you're a self-employed travel agent, they'll look at your last 2 returns, but they may ask you for more information to make sure that your business hasn't been impacted recently.
Gosh, I love that. It's important to be reminded of that. And I actually have a friend that's in a different city that is a realtor, and turns out that they were able to find the perfect dream house that they've always been looking for. And it just finally came on. They wrote an offer on it. His existing income for the past few months at the beginning of the year was kind of light. And the lender said, hey, can you show me your under contracts and pendings? And it was, 3 times the amount that he has already earned. And he was saying that actually because of COVID-19, there's a lot of movement in the market. And as a realtor, he's going to have a stronger second quarter than he did first quarter. And the lender was like, this is great. I mean, and that's not obviously you, and it's not obviously here in Colorado, but it was just a really interesting commentary that they're looking as much as what your existing income is versus your past income. All right. Next question I have for you is just timelines of transactions. And again, this is with Guild Mortgage and this is with Patrick's team, but someone wants to write an offer on a property and maybe the property is going to stay on the market for just a little bit longer now because there is some uncertainty. There's less showing volume as what we're seeing right now in the current marketplace. That might change depending on when you listen to this podcast. But if someone's writing an offer, what's the ideal timeline that you want them to build in for their appraisal? What's the ideal timeline for closing? And just, we're making a bunch of assumptions here, but if someone's writing an offer, what makes sense right now as far as some of the terms that they might put in as it relates to timing?
So that's going to vary a lot between lenders. So that's some other good questions to ask when you're interviewing lenders is, hey, what's your time frames? What's your turn times would be the industry terminology for that. So,
well, on a refinance, first of all, even with us, we don't prioritize refinances because you're still going to have your home, even if it takes 45 to 60 days to close a refinance. So your livelihood is usually not on the line. So we're running anywhere from 30 to 60 days on a refinance. And I think that's probably industry standard, and you may even see longer on a refinance. On a purchase, we look for a 30-day close in general, an appraisal about 2 to 3 weeks. So we're pretty quick. We've done a lot, 21 to 14 days recently. And that's usually when we have to step in and kind of save a deal because it's fallen through with a different lender. But so I think in general, we still prioritize purchase so we can still get it done really quick. 2 to 3 weeks for an appraisal, 30 days for closing is safe. One deadline you probably want to be super careful of if you're a real estate agent or you're submitting an offer, you should talk to your real estate agent about this is I've seen a lot of COVID-19 clauses or protection clauses that protect the client if they are to get furloughed or lose the job or something goes sideways at the last second due to COVID-19, then they're protected. So, like I said, we're verifying employment the day before closing. And a lot of time those dates to back out are, a week before closing. So you want to just make sure you have some deadlines, either a COVID-19 addendum that protects you in case something happens, or its loan objection deadline would be, day before closing.
Yeah, and it's going to be state specific. It's going to be realtor association specific. There's all sorts of different addenda out there that helps our current environment. And we saw a lot of this come out of the recession 10 years ago, 12 years ago. We're going to see some other things come out of it too that are going to be updates from realtor associations and local, whether it's the Colorado Real Estate Commission. There's just going to be a number of different things, and it's important to make sure you're protecting your clients. A thought that I have that I think is just wise for people that may be quarantined, they may have been, and I heard the statistic that some analysts, and who knows what'll actually happen, but some analysts are predicting that 10% at least of the jobs that people used to go to office buildings and go to a workplace are going to remain stay-at-home online jobs for good permanently. It could end up being more than that, but if someone is cooped up at home and they're feeling like, I don't want to be working out of my bedroom or my basement, I'd like to have an office, or I'm realizing I need a bigger space. What are some things that they might be able to do to tighten up their qualification process prior to actually applying for a loan, Patrick, where you feel like this is going to be really making you ready to purchase if they're getting ready to apply for something in a week or 2 or 3? Is there anything that they can do to maybe revamp their credit score, do some things that are going to be helpful to their situation?
Yeah, I think I'm one of those people that's like, I'm working in a basement and I don't know if you can hear the chicken. Do you hear it?
I could. Yeah, I could hear the chicken.
Yeah, there's literally
I thought it was a cat at first.
No, that's a chicken. We have chickens. There's a chicken standing at the top of the window well, so apologize for that. So
Chicken Little, the sky might be falling.
I need a better home office for sure. So Anyways, a couple things that to do. Well, number one, I think if you're considering moving, you should just apply. You should just call me up. Or call a lender up. It doesn't have to be me. Just make sure it's a good one and just apply, because the more time we have, the better. So, and we look at so much to see what you qualify for that, I could give you some real general stuff like pay down debt or save some money or do this, but that's just general. Everybody's situation is different. So what I would suggest is apply. It's free. The best thing about real estate and mortgages is it doesn't cost you anything until you decide to do something. Until you decide to do something, it's all information gathering. So once someone applies with us, we can look at the credit, we can analyze it and say, hey, if you pay down this, if you pay down that, your credit score goes up 30, 40 points, save a ton of money. Or, maybe they're need to save some money just to get a down payment. We can give them tips on that. Maybe, we've seen situations. I just had one where a lady had co-signed for 3 of her kids for cars, plus she had a car of her own. So she had 4 car payments, even though she was only making 1 on her credit report. Well, we have to count those car payments as debt, and that reduced what she qualified for. So one of the tips I gave her was, why don't you go refinance all those cars into your kids' names and get off of them? So that's what she did. Now she, qualifies for the house. So there's all sorts of little weird scenarios like that, where if you apply now, we can give you advice, give you tips, give you timelines, and help you get ready to buy a house you want.
I just love that advice. And speaking about advice, you have released, and this is for any business owner, but this is also specifically geared towards realtors, 100 socially responsible business ideas for real estate agent. It's something that we covered in our collaborators call. Our company gets together by Zoom now every Wednesday to just talk about best practices. There's a host, a rotating host. It's sort of like a book club, but share a podcast, share something that's meaningful, that is actionable, that is helping your business right now. But I'm going to read through it. And what we're going to do is, what we did as a group is go through this list. And Patrick, I'd love to hear how you curated it, but it's some stuff that's amazing. And some things that are very simple, very actionable, but things like create a list of your 50 VIPs, people that are important to your life, personally and professionally. They're dot connectors. You can call 10 of your past clients every day and ask how they're feeling. And if there's anything that you can help with, tell them that you're thinking of them. Another idea is call 3 new builders per day and ask how you can help. Send postcards to the neighborhood you're farming with a list of price ranges of active buyers that are looking to buy right now. Post that same information into social media. So there's all these different things. And I think as a business person, Patrick, I have noticed that you've done a very good job of really curating content for your database to help them understand that, one, you're able to help their clients or themselves with a new mortgage, but you're also out there giving information for people to be more successful, that hopefully they sell more properties and come to you with their clients needing mortgages. And so how did you come up with this list? Why did you come up with the list? What are some of your favorite things that you're implementing yourself? And I know that's a lot of questions all at once, but just why this list? And we'll share it in our show notes if that's all right with you.
Yeah, for sure. Well, I wish I could say I thought of everything myself, but I didn't. On one of our previous podcasts, I take part in coaching. So I get coached. I have a great network of people that we share ideas and coach. And that list came directly as a result of being coached and sharing ideas with others in the industry. A lot of them doing much better than me. So I always try and find a mentor who can show me what to do. So that's how I came up with the list. But where my strong point is implementation. So when I get a good idea from someone, is implementing it. So my favorite parts of that list are, well, I think in general, a lot of people are sitting at home. A lot of people will continue to be sitting at home.
And prior to all this, I think most people were saying, I don't have enough time. I don't have enough time to call my clients. I don't have enough time to work on my database. I don't have enough time to finish my business plan. So, once a year, you write all these things you're going to do, New Year's resolutions, business resolutions, and then you're too busy to do them. So I think, or that's at least the excuse a lot of people run into. And now we're sitting at home. So it's a great opportunity to do those things that you had been putting off. So I like that overarching approach to that list. Like, do your database, make your VIP list, make your past client list. I like all of those pieces. And then my other favorite part of it is, from a prospecting standpoint, if you're any business and you're a business owner, your job is to go out and get more. And typically that feels very salesy. So, you're trying to sell something. Well, most of my sales conversations now are starting out with, hey, how are you doing? Are you okay? Is there anything I can help with? So most of the prospecting ideas in that list have a lot to do with just checking in on people and making sure they're okay. And us as business professionals, how can we help? So I like that part. My favorite little just one-off tactic in there was the portraits, portraits. So like portraits, but these are pictures you do of the family on the porch. So you can hire a professional photographer, drive around to all your past clients or your favorite past clients, tell them, hey, we're going to come by at this time, come out in your Sunday best and stand on the porch and we'll take a picture of you. Professional picture. So I thought that one was kind of funny and a little corny, but funny. And I'm sure people will remember that.
Well, and I love it because if you're anything like my family is, you're going to get photos, probably in our case for a Christmas card. Yeah. And who knows when you may be able to do those sessions. A lot of photographers are trying to find ways because they can't really group people up and do that. So it's kind of a way of doing a mini session where you can still stay socially distant. A lot of people, if they love their home, that's going to still be a nice keepsake. And there's just tons of examples in here. And the thing that I love about this list, Patrick, is that I think for many business owners, one of the hardest things is kind of getting a stalled car started. It's like, you think about it, if you've ever had a stalled car, it's like, just getting that engine to turn over is the hardest part. When you have a foundation of a list, you might like 20 out of the 100 things on this list that Patrick has given to us that we'll share in the show notes. But the point is, it gives you the ability to look at them and pick. And who cares if you only like 20% of them? Go implement those 20%. Go find 2 or 3 items in here, and I bet you do another deal. So we'll share that as a link, both in our email list, but then also in our podcast show notes. We're nearing the end of our time, Patrick. If people want to get in touch with you at Guild Mortgage, how do they get in touch with the Patrick Langhans team at Guild Mortgage?
I mean, I'm old school, so I like the phone, 303-209-7812, 303-209-7812. Or if you just Google search Patrick Langhans Guild Mortgage, you'll find my website and you can inquire there. All my contact information is there.
I want to make this very important point, and you'll know it if you listen to episode 117 or 118. I've personally worked with Patrick. I have several clients that have successfully closed transactions with Patrick. A shout out to you. You're working with Blair right now, and she's like, Patrick, regardless of what we're going on in the economy right now, Patrick is phenomenal. Calls me every Tuesday. His team's on top of it. My clients are so assured that they're getting regular communication. I think that's the biggest thing to just share as we end this, Patrick, is that in this time, and we call them wellness calls, by the way, when we're calling our clients, wellness check-ins, just making sure if you're not actively working on a deal with them, how you doing? How are things going? Is there anything I can help you with? It's a good wellness checkup. one of the things that I think really frustrate people is when there's a lack of communication. And Patrick, you have done such a wonderful job within our team of making sure that we feel very informed. Our clients feel great. They feel like regardless of what the issue is, their hand is being held throughout. You're telling them proactively what's going on. And for those that missed episode 118, Patrick talks about how he structures his business, some things that really deep dive into how successful they have become because of just systematic processes. Patrick Langhans from Guild Mortgage, thank you again for sharing a COVID-19 update for us as it relates to the lending environment. And I just really appreciate your time and energy. I know Kayla Davis, our podcast producer, appreciates it as well as you help finance her home. And as I love to say, we will see you around the neighborhood. Thanks, Patrick.
Thank you.